Auzubillahiminasyaitonirrajim. Bismillahirrahmanirrahim. We meet again for part 3 publish account. Here, as we already know how the format should be for the report, we have profit or loss, we have financial position, and we have statement of changes in equity, and we have notes for the property, plant, and equipment. And then the next step, what we should do is to fill in the blank. So we take whatever figure we have, especially provided in the trial balance, and then put it from on the suitable places. Okay, here we have 8% preference share, 1 million. Okay, where it should be located? It should be under statement of changes in equity for the share and capital. Then we have a dividend income. Right? So dividend income must be goes to the investment income. There. Right? And then we have tax paid later on. So the tax paid, whatever company pay for the tax for the year, goes to the taxation expense for the year. Administrative, all the salaries and wages and other administrative costs should be put under administrative expenses. And then we have building. So the building is 1.550 million. Should goes to the notes of the account. And then we have accumulated for motor vehicle. So means actually we have an asset names motor vehicle, and then therefore we have accumulated depreciation. So put it under accumulated depreciation of motor vehicle in the notes to the account. And we have building. So the building here for accumulated depreciation goes to the notes, right? And then we have accumulated and the cost of the building, right? Then we have land 4.5 million. No need to put it under property, plant, equipment, because we have to go for the details under the notes to the account. We have land 4.5 million. Bank 370,000. What is this bank means? Whatever bank balance you have in account goes to the current asset in the soft P or your statement of financial position, 370,000. And then you have motor vehicle 500, half million in the notes to the account of your assets, motor vehicles. And then later on you have selling distribution. So selling distribution cost incurred for the year within 1 year is 310,000. So it goes to the profit or loss account under selling and distribution expenses. And we have general reserve. What is this general reserve? Actually part of your reserve. So you have to put it under statement of changes in equity. Right? And then you have retained profit, another item for your statement of changes in equity. And then you have your ordinary share, and not 5 million ordinary share in your statement of changes in equity. Your rental income. What is this rental income? It's another revenue earned for the company within 1 year. So goes under gross profit item. So no, it's additional or add to the gross profit item. Your account receivable. Account receivable is your current assets, right? Put it under your current asset. And then you have director remuneration. Director remuneration must be administrative expenses. Easy. Just add to the administrative expenses. Later on, you have your finance expenses. What is this finance expenses? Example, interest expense, right? So you have your finance cost to be recorded under your statement of profit or loss. And last, and not really last, this is the cost of sales. Cost of sale is cost incurred in order to sell. Cost incurred to make your sales ready. So put it under at the second top of your statement of profit or loss account. And then you have your share premium. It's your another reserve. The share premium should goes to the statement of changes in equity, 23,000. Your investment, 200,000. So your investment goes to the investment under your soft P. And then your sales for the year, 2.590 million, goes to the statement of profit or loss, where you have to minus with the cost of sale in order to record your gross profit, right? And then you have your interim dividend paid. What is interim dividend? Dividend paid during the year where the company agreed to pay to the ordinary shareholder already paid. So here actually it must decrease your profit or loss. So it goes to under statement of changes in equity, reduction of profit or loss account. And then you have bank overdraft. So bank overdraft must goes to the current liability. Last, you have your interim dividend preference. Dividend paid must reduction of your profit or loss. right? Ladies and gentlemen, as you can see, I'm using two colors for the item of account in the profit or loss and in our publish. Here, bank overdraft is orange color. Actually, this is credit balance, right? And then yellow color is for the debit balance, right? So as you can see here, for profit or loss, once you already completed, you have two colors, orange and yellow, where actually for debit and credit, where you have to plus and minus with the same color, where the credit should increase the credit and debit should increase the debit. Once you are differentiate both, you will get your profit after tax. And then later on, we are going to move to the level 4. For the level 4 is where you are going to do double entry for the adjusting item. So take here, you have additional information telling that the depreciation charge for you is 60,000. So we have two. For every additional information, normally we have two double entry. Once you must debit, second you must credit. For the yellow is debit, for the orange is a credit. So depreciation charge debit means you increase your expenses. So depreciation for motor vehicle is stated clearly must go to distribution expenses. So you add to the distribution expenses, mean you increase your selling and distribution expenses. So debit. So again, for the double entry rules, you must credit something. So credit 60,000. So actually this must be increase your accumulated depreciation. So you credit your accumulated depreciation for motor vehicle, right? And then again, next you have your interest bank overdraft was accrued by 20,000, right? So this additional showing that you need to do some recording where you must debit something and credit something. So accrued interest actually your finance cost. So debit accrued, debit the interest, so you debit, so you put the yellow one on your finance cost. And then credit, what is being accrued mean is your liability, current liability, because you have to pay, it's an obligation for the company to pay within 1 year. So put it under current liability. Next, you will have the audit fees. Here stated here that the provision are to be made for audit fees 100,000. What is this supposed to mean? The audit fees have not been recorded yet, have not been paid yet. So what you need to do is to record debit, credit in your publish account. For the audit fees, actually debit increase your administrative expenses. So increase your administrative expenses, debit and credit. Why? Because it's not being recorded means not being paid yet. Is it an obligation of a company to pay? Yes, it goes to the current liability under obligation of the company. And next we have 50,000. Here, the card stated here, there is a debtor who owed 50,000 must be declared bankrupt. This is actually bad debt. So the yellow is debit, the orange is credit. So bad debt may increase your expenses. So you increase your expenses, put it under administrative expenses, and then your credit mean you reduce something. So you must credit your account receivable, right? So and then we have some more here. We have 25,000. Depreciation for the building for 25,000. Again, the yellow mean debit, the orange mean credit. So 25,000 actually means increase your expenses, so you have to debit your expenses, the rule of the expenses, and then you must credit accumulated depreciation for the building, right? And then at the end of the year, normally the company will declare dividend. So here 5% dividend for ordinary shareholder. So how are we going to find the figure? Because there's no figure, so you have to calculate. It's easy. What is 5% mean? 5% out of the total share issued for the year. So you have 5 million. So you multiply with the 5% and then record. And then you must remember dividend actually out of profit. Reduce your profit, debit your profit. This 5% out of 5 million, and you must credit something mean credit your dividend payable, because it's an obligation again for the company to pay for the shareholder, right? Alright. And then for the preference shareholder, stated here the board of directors propose final preference dividend. Final preference dividend means how much remaining of dividend for the preference shareholder. So how do we find that? So you have to look at the interim preference dividend here, 40,000, right? And then the preference share stated here actually 8% preference dividend out of 1 million. Means total dividend the company have to pay is 80,000. 8% from 1 million, right? So here you have to deduct. So if the company already stated that they already paid the 40,000, so the remaining balance must credit. You must debit. The profit will be another 40,000, right? So you have to calculate 40,000 here, yeah, and then you have to credit the dividend payable here. Yeah, alright. Okay, so now we are going to the last, right? For the second last, two last of the transaction normally need to be recorded for the final year of the published land was revalued at surplus of 500,000. What is it supposed to mean? You have to increase the value of land, right? So you go to the value of land of 500,000, yeah, and then you must credit another 500,000, right? You have to credit another 500,000. So debit your land, increase your land 500,000. Credit what? Credit your other comprehensive income as your another income. So debit and credit. Here, we have another additional information telling that the tax expense for it is 48,000. Actually, this is 48 million. So 48 million, 48,000. Sorry, 48,000 means you have to finalize your tax for the year is 48,000. So here you have to put in your financial statement your tax charge for the year must be 48. But we already put tax paid. For the year is 50. What is this supposed to mean? Again, you have to do some adjustment. 50 you pay, the company pay, and the final tax is 48, mean company overpay. So you have to reduce 2,000 out of 50 in order to get your final tax for the year in your profit or loss. Mean once you reduce, you must credit your expenses, right? And then debit your tax recoverable. So we have another 2 cards by rights to complete with the mission. But that one we want you to calculate. Yeah. So once you are done with doing the level 4, the next thing is to finalize all the figures, right? So you have to add all the orange, all the credit, and minus all the debits and expenses. You will get your profit after tax. You will get your other comprehensive income. Later on, the flow of the preparation should goes to the profit statement of changes in equity. We call it as changes in equity. So C, so CE. So here I show that you have another income. So out of the your profit or loss, you have another ARR incurring for the year. So you increase, post to the profit or loss account, and then you have profit after tax. When you calculate that here, put it under profit or loss account in your SOCE. So once you're done with profit or loss, you have to finalize your SOCE to find your total share capital, total reserve, post to the profit or loss account, right? And then you complete your PPE. So how do you find your PPE? To finalize all the carrying value actually. So you finalize what is the carrying value for the land, 5 million. What is the carrying value for the building and motor vehicle? Simply minus, or you have to differentiate what is the building and total accumulated. You have to minus in order to get the carrying value. And also your motor vehicles. So the total carrying value of your PPE must be recorded final and post to the PPE statement in your profit or loss account. Then inshallah, once you're done with this, actually you're completing all your debit credit, you must get your statement of financial position balance, even though you don't balance the figure, because you are doing the correct, especially the double entry rules. You really hold the double entry, so you're not going far away from what actually you must do. That's the basic of accounting students should have. Thank you. Assalamualaikum.
Kemanapun aku pergi, baik Bersembunyi di manapun, selalu engkau temukan. Aku merasa letih dan ingin sendiri. Tanya pada siapa, tak ada yang menjawab. Sebab semua peristiwa hanya di rongga dada. Pergulatan yang panjang dalam kesunyian. Aku mencari jawaban di laut. Ku seret langkah menyusuri pantai. Aku merasa mendengar suara kemanapun aku pergi, selalu ku bawa-bawa perasaan yang bersalah datang menghantui.
Okay, I think the game is pretty good. It helps me to study. It helped me to study financial accounting. I have trouble studying about the format. To remember the format, it's kind of hard. But when I do this game, people discuss about it. It helps me It helps me to grasp the format, and it makes me remember it easier.
From this activity, I can easily understand all the format from the question. So in the real exam, I could easily write out the format first, and I will get extra mark. And I would like to have this activity again and again. Yeah.
Okay, so we all know that cash flow is a little bit difficult and publishing is also difficult. So I find this game to be something that is really, really interesting, and it gives us a visual and not just something that we write on the paper, because a lot of people don't really understand that one. So it gives us a visual, something we can touch, and as we all know, hands-on education is a lot better and we can understand better. And we can impart it in the examination, because the understanding of it, instead of just memorizing what's on the paper, we can have it, arrange it, and then we can truly impart it on the paper with an understanding, so that we can apply it not only in the exam, but also after when we want to work or something like that. That's all.